Good evening, all, and welcome to the Bottom Line Commodity Report. With Mitt Romney's new running mate, Representative Ryan, we don't seem to see a huge reaction in the market in the overnight session. So let's talk about where the market is right now and what the condition is. The condition meaning, is the breadth of this rally widespread? Are more stocks rallying in association with the increase in the price of the stock index? Looking at the S&P 500 on a weekly chart, we see that the week ending March 30th, that's the one that I'm pointing to right here. On the week ending March 30th, the market closed the week at 1397.5. At that point in time, we fell back and we retested or retried to rally, and as you can see, the market closed that secondary high, or the highest level, at 1392.5. Last week, we cleared that high, closing above 14 even at 1402.25. However, the advanced decline on a weekly basis, as you can still see, is still demonstrating a weakening picture or a potential what we call bearish divergence. Prices going up, but stocks are not associating it with that or accompanying with that rally. It is on decent volume, however. So now let's take a look at the daily chart. Now, as you can see, with the on-balance volume, we haven't seen a clear, concise breakout of the volume levels. And also, as you can see here from the old highs, it's not really moving in an enormous breakout mode, one that you would consider to at least establish a newer high. So we have not seen newer high volumes associated with this rally. That's a concern. When you take a look at the day-to-day accumulated advanced decline ratio number, you still haven't taken out the July numbers as far as the advanced decline, even though prices have. So this is a situation, I believe, about a week and a half ago, I said markets can move on air. We were short from 97.5. I didn't trust the market. I said I think we'll probably, if it would stall in here around this 89 level. The market pulled back, only coming to approximately, I think in the overnight session, it was around 1390.5. I think that was the day we were trying to get out at 89, so we missed it by 1.5 points, real tight. But we did cover, and we didn't have to take any heat going into the weekend. What I see from here, though, is notice that the change or the pace of price change is diminishing. These real bodies, look at the real bodies. There's just not a lot of movement between the open and close. More importantly, it's starting to look to me as if we are forming a rising wedge formation. So I think that this rally, coupled with the fact that it's not been on substantial volume, the fact that we don't have that advanced decline line associating it with higher prices, with more stocks moving in conjunction, we're looking at a potential additional short situation. Or when I say additional, I mean I'm looking to get short this market. I just want to do it on a signal. The problem is it could come in one fell swoop and get us back down to 1373, but make no mistakes, I do not want to be long this market up in here. I think we are seeing telltale signs of weakness, and here's what the other indices show us. Clearly, the Nasdaq's advanced decline is on a downtrend as well. It's not taking, as prices are making newer higher closes, we are not seeing follow through to the upside. So we have a higher high and we have lower highs. So significant divergence is developing even within the Nasdaq. That same type of divergence is very clear and evident in the Russell, the 2000, the small cap stock sector. So to me, it's a matter of how much more can prices linger in this type of narrow range open close relationship, number one. Number two, can it drag on another few more days? We take a look at our big or the economic calendar, and the biggest report we're going to come into is GDP for the European Union, and it's important in these days and age to pay attention to what's going on abroad. This week we have retail sales on Tuesday, PPI on Tuesday, that's August 14th. We have a slew of economic numbers coming out on the 15th with the Empire State Manufacturing Survey, industrial production, U.S. housing market index. Then on Thursday, we have housing starts, the weekly jobless claim, Philadelphia Fed survey. Friday, we come in with just the economic leading indicators at 10 a.m., consumer sentiment, and the European merchandise trade report. So those are some pretty big numbers that can come into play for us this particular week. So I think now that the Olympics are out of the way, people are wrapping it up. They'll be coming in. Traders will be focusing in on the world, the economy, and the potential new leader here, or at least the elections be a little bit more closely watched in the weeks ahead. So truthfully, I think that we're going to have to look for some maybe intraday. I don't think we're going to see a chance for pivot resistance up here. I don't see, with the way the advanced declines are working right now, I do not see a breakout of this little trend line resistance against these highs. So that's the outlook on equities right now. So let's look to the bonds for confirmation. The bonds came really right down. This box has been there for a number of weeks. I keep using it as a reference because after a strong rally in the market, we typically see a trading range, and we hit the top of the range, we hit a bottom of the range. We are in a weekly sell, but we should, if the equity markets do kind of tumble or top out or go into a corrective phase from here, then bonds are going to come right back up. In the overnight session, they're up a few, not a big reversal type of movement. But I don't think that we're out of this trading range box, so to speak, at least not for this week. Seasonal trend, we see a little bit of strength coming in ahead of the market, going into about the third to fourth week of August, and then we see kind of a decline. So I have a little bit more faith that we're going to see a bounce. I think this first test of these lows it's just not going to be violated. And besides, I would really I want to be a seller at the top end of the range, or a seller on multiple closes below this box level. So we need to see multiple closes below this level, and or look for a retest up at this level to be a seller. Those are the two areas. To be a buyer in here against a weekly sell after market's been in a kind of, let's count together, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This will be the 12th week, 3 months of consolidation. I think that's dangerous to be a seller or a buyer in the middle of no man's land up in here. Sell it above the range, sell it below the range. It's tough to be a buyer in here. All right, in looking at corn market, we have this long shadow, almost reminiscent of a shooting star, a blow-off pattern, so to speak. In the corn market, the government says there wasn't as much corn as they thought, but it wasn't nearly what traders were expecting. So the bottom line is that when we take a look at the corn market, we might see a quick trade back down to test these lows in here, the 740, 750 handle. In time going into September, we're going to see corn come out of the ground from some of the lower producing states. Georgia, for example, not a top 5 tiered corn producing state, but yet there will be some inventory coming out of the market. Don't forget, some states did plant a little bit early, might have gotten a lead on things. We'll be getting some product out of the ground. Farmers did hedge a portion of their product, so what I see is a little bit of that pre-harvest pricing coming into the market, which means we should see a reprieve in price for a little bit. But make no mistake, if you're going to be a seller of the corn initially, 850 corn was obviously rejected well. See if it gets retested and then fails. Downside action in the next, I'm going to have to say 60 days. That sounds like a lot, but the next 60 days, downside action, I really don't see much chance for prices to get back under 675. So that would be, 675 I think would be an absolute gift if we saw that type of movement back into the market. I think possibly $7 is more at least somewhere in this type of range, 715 or so. I think somewhere in this zone, and I'm going to keep these lines up here, but between that 40 cents, between 670 and 710, I want to be a buyer of this corn market going into 2013. Now, as for the S&Ps, one more time as a review, we do have a daily potential double top. One of the things that I'd like to share is that while we do see this double top, on an hourly basis Sunday night, we have a low close doji formation. So this could be the beginning of a meaningful correction. We'll know more as we wake up tomorrow morning. So it's tough to put out a sell recommendation one more time up in here, but I think the market's, by the very nature of these, the way it traded last week, even though we closed on our highs Friday, I was probably anticipating a little bit higher follow through, but obviously with the news of Mitt Romney, this may alter the way Wall Street perceives things. So we'll be back in action and be a little bit more aggressive this month as we have a little bit more clarity in market direction. Thank you all, and I hope you found this information helpful.